It is such a pleasure to be here with you guys this evening. I have to thank everybody that braved the traffic as well as the weather to get to Spanish Court this evening. If you can believe it, it's actually been 3 long years since our last in-person investor briefing. Our last investor briefing was in 2019 with Minister Nigel Clark. And it feels really great to be back in person and with everyone here. Thank you again for braving the traffic and the rain to be here. I also really want to extend a very special welcome to the listeners on Nationwide News Network. Hopefully we can keep you company and slightly entertained while you sit in traffic in the rain this evening. So thanks again, everybody, for joining us. Today, our plan is to discuss the impact of inflation and the central bank's policy response. So you may be asking why inflation is important, why is this relevant? How we like to think of it is that if you went to the supermarket in 2021 and you bought a basket of goods, let us say that basket of goods may have cost you $100. In 2022, if you went to the same supermarket and bought the same basket of goods, it would cost you $110.20. That's what a 10.2% inflation rate looks and feels like. If you then multiply that impact across every purchase, every transaction you make, the effect becomes significant. So if you have any plans at all for the future, whether it is to buy a home, to retire, to make an investment in your business, all these plans need to be adjusted for inflation. So today, we'd like to figure out how exactly do we do this? How do we change our decisions to take inflation into account? Helping us to figure that out today are 3 very esteemed gentlemen. To my immediate left, we have Mr. Keith Collister, the Executive Chairman of the ATL Pension Fund. He also wears many other hats, but for brevity, I'm going to stick with that one. Keith, thank you for being here.
Sure.
To his left, we have Mr. Charles Ross, the Founder, President, and CEO of Sterling Asset Management. And to his immediate left, we have Dr. Samuel Braithwaite, a lecturer at the University of the West Indies. Dr. Braithwaite is from Guyana, but we will not hold that against him now that they have won. So thank you, gentlemen, for being here. We really appreciate your time. So getting started, just a quick overview of the evening. I will spend about 20 minutes grilling these gentlemen, and then we will open up for a series of questions and answers from the audience for another 10 to 15 minutes. Now, let's start at the top. Dr. Braithwaite, Jamaica recorded year-on-year inflation of 10.2% in August. How did we get here?
Good evening. I think that question has been answered time and time again, but just to repeat. So for the better part of the last decade, inflation rates around the world were pretty low, and then COVID happened. COVID, as we can recall, led to supply chain disruptions. So some of you might have seen images of scores of ships off the coast of Los Angeles, the port of Los Angeles, yes? If we look to the United States, again, during COVID, the United States government had significant stimulus packages. So people were at home, the government gave them money, and people are shopping. So people are shopping, so that's from the demand side. And on the supply side, there is gridlock. So we have prices going up. And then February 2022 rolls around, and Putin decides this is the perfect time to invade Ukraine. And why is Ukraine important? Why is Russia important? Well, we talk about wheat, we talk about fuel, yes? So we have another shock to the global economy. So when you combine these 2 things, yes, you expect inflation to happen. And if you listen to some local commentators, they will say to you that, look, a lot of the inflation facing Jamaica is external to Jamaica, and that is why you find some commentators coming out strongly against what the BOJ is doing. I want to make it very clear from the beginning. I do not have a problem with the BOJ increasing interest rates. Yes? What I have a problem with is the pace at which they do it and what we economists call fine-tuning. So every time you meet, you're turning the dial a little further. I am not sure I'm in agreement with that. Yes? But we have to recognize, if you go back all the way to 2017, the Bank of Jamaica consistently lowered interest rates. And I mentioned 2017 because 2017 is the year when the Bank of Jamaica moved towards what is called inflation targeting. They officially started targeting inflation as of 2017. And from that time, they lowered their policy rate all the way to 0.5. And I can't recall any pushback against that. Yes? So that's I don't know if that answers your question in terms of inflation, but I needed to put in that
well,
part on the Bank of Jamaica before, Yeah.
Perfect, Dr. Braithwaite. You're making my job a lot easier because you just preempted the next question, which was a shift to the BOJ's policy response. And what I wanted to ask was, the BOJ has increased its benchmark interest rate, as you mentioned, quite rapidly, in fact, by 6% since October 2021 until now. Today, in fact, fresh hot off the press, the Bank of Jamaica has just released another press release indicating that it raised its benchmark interest rate by 50 basis points. So we're at 6.5% today. And one big consequence of that, of course, is higher interest rates, higher mortgage rates for homeowners, higher interest rates for businessmen. The BOJ has also withdrawn billions of Jamaican dollars of liquidity from the local financial markets. My question to Keith right now, how effective have these steps been in the fight against inflation?
Okay. Well, as Dr. Braithwaite suggested, a lot of the inflation is externally driven. So what the Bank of Jamaica is really saying is we have limited tools to fight inflation, and also the tools we have, and they like to use a phrase, transmission mechanism, which really means, do the deposit rate increase when they raise the base rate and stuff like that, and also lending rates. And basically they're saying that the transmission mechanism here is inefficient relative to other countries globally in their view. So what they are really targeting now, which is interesting because it's a shift of policy of really from the beginning of this year, you could argue, I guess you could argue it started in a more limited form last year, but they're not only raising interest rates, they're not only tightening liquidity by removing they put quite a lot of liquidity into the system during COVID, so they've withdrawn that. But they're also not effectively, they are targeting the exchange rate now. So that's a change of policy from where they've been for a long time. We told the IMF we were a free floater, and yeah, I know you laugh, but that's what we told them. And there's a category of free floating countries, which means that you don't intervene very much in your exchange rate. Now, what the Bank of Jamaica will tell you, and we were having a little bit of a discussion about this earlier, is that not only are they targeting the exchange rate because they want to reduce inflation, they think that's the most effective way of reducing inflation with the limited tools they have. The pass-through, because obviously most of our stuff here is imported. So that's one aspect to it. And in fact, Jamaica is one of the very few countries in the world that have actually appreciated their currency this year, where such company as the Russian ruble and a few others.
Mexican peso.
So which is quite a remarkable thing relative to what usually happens to Jamaica when we have this kind of global international turmoil. But what they will also say, and this is actually something that, and I wear another hat, I am actually chair of the Economic Affairs and Taxation Committee of the Chamber of Commerce, and Samuel, I think, are you still on, or you were on the PSOJ economic policy? You've moved yourself, have you?
I was told thank you.
You were told thank you. Okay, well, I'm still on it.
And I don't get emails anymore.
You don't get emails anymore, so you're not on it then. Anyway, the point is, as Samuel was saying earlier, there is a view, and I think it's true, that because we don't have a forward market in Jamaica, because we don't really have a very efficient FX system still relative to, say, the global markets, then what importers will do, most companies are importers, they will add an extra $5. They will say, okay, this exchange rate is moving fast. I'm going to need to buy back these goods that I've just sold. I see some people nodding, so they know what I mean. And therefore, I'm going to put $5 on it as an insurance policy against the exchange rate moving and me not being able to buy back my goods. Now, the Chamber has actually argued for a while that excess volatility in the Jamaican economic system, and there's an issue of what do you define excess volatility to be, but my answer when people ask me this, which they often do, is you know it when you see it, which I think is actually the Bank of Jamaica's position, because they haven't really defined it very carefully. I think what they say, they used to say they don't like disorderly FX markets, which meant big moves. But now they've basically changed that policy really from January to sort of say we really want it very, very stable, right? Now, I don't think they want to do that indefinitely. It's definitely a change from what they were doing before. I understand why they're doing it. Obviously, it's not something we can do indefinitely here. And there are many people who are worried about, all right, what happens at the end of this period? Do you have a big jump in the exchange rate at that time? It's a good question, but I think their view is, let's just get through the next 15 months. We think that the inflation will drop back into our range at the end of that, at the end of next year. That's their view, back to their 4 to 6% target. And when it does, then we'll move away from our stern policy of trying to manage the exchange rate and use the foreign exchange and intervening when they think they need to achieve that. So that seems to be their current policy, and they're quite open about telling you if you ask them.
I appreciate that, Keith. You're saying that the Bank of Jamaica seems to be managing the exchange rate as a tool.
I think is managing
the exchange rate as a tool to control inflation. Typically in economics, the interest rates are that tool. Dr. Braithwaite, you wanted to say something, Charles. I know you also have strong feelings on the topic.
Yeah.
But Dr. Braithwaite looks like he's bursting.
I feel strongly.
Well, Charles would be bursting in this one, but
I feel strongly about the exchange rates. As a Caribbean person, I think everyone from a tender age, you deal with exchange rates. At Christmas time, you get a little $10 or what have you. You need to know how much Guyana dollars you're going to get. So I've been dealing with exchange rates for a long time.
Charles,
but I disagree a little bit with you, though, Keith.
Just tell us what the Guyana dollar is versus the US dollar. Then.
No comment. No, now you understand my fixation on that.
No, but it's been that for a very long time.
Correct.
It's been stable for a while.
Yeah, about 20 years now. But anyway,
Exactly.
So first of all, it is not inconsistent to have two targets, right? There's an IMF economist who I respect, Jonathan Ostry, who would say, look, for countries, and Jamaica would fit that bill, you have as your primary target the inflation rate. No problem there. But as a secondary target, the exchange rate would suffice. Now, the Bank of Jamaica, as far as I'm aware, has never made any strong commitment to say, okay, we're targeting volatility within this band. They're very vague on it, right? Because again, officially, by law, they have to target the inflation rate, yes? But if you listen to Governor Biles, and as a person who would have spent a number of years in the private sector, you see him walking this tightrope, right? Because he understands the importance of the exchange rate. But by law, again, he has to target the inflation rate. One more thing. It's a pity, lecturers, we like PowerPoint slides and the like. So you're going to just have to follow my hands. Now, going back to 2017, that's a very key year. The bank withdrew from the foreign exchange market in the sense that it reduced its footprint. Yes, because after officially moving to inflation targeting, the idea was to reduce how much influence they would have in the foreign exchange market. And so they moved towards, auctions, and then they had the flash interventions and so on that they would do if they see any disorderly movement in the foreign exchange market, right? Now, if you look at the graph, what you will see after 2017 is significant volatility, significant swings. It's appreciation, depreciation. And what you will hear from the bank is that that's a good thing. That is what should happen. I have a problem with that. If it were going like this, up, down, along a horizontal line, no problem. But it was going like this. So you still had significant depreciation in the value of the Jamaican dollar. But this time around, you're having these swings.
Okay,
yes?
I appreciate that, Dr. Braithwaite. Charles, do you have a comment?
Well, just following up on that, I mean, those swings didn't happen by accident. And there is a bit of a disconnect, and there has been for a very long time, between official policy and what actually happens in the marketplace. What I would say is that I don't buy this argument that, because we're a small, open economy, we have to do this, we have to do that. The laws of economics apply everywhere. And in countries that are growing and developing and increasing the wealth of their nations, the exchange rate is treated as an exogenous variable. Mm-hmm. In other words, it's an outcome of various other policies. It's not something that the government seeks to manage and manipulate on an ongoing basis. And unfortunately in Jamaica, it's been an obsession of ours for several decades. And it could be one of the reasons why we've had no growth for several decades. But, this is about inflation. And I also don't buy the idea that, the inflation that we're having is all to do with Russia and supply chain issues. I think the inflation that we're having is due to the response to the pandemic. We had, not just in Jamaica, all over the world, probably less so here than in other major economies, there was huge monetary and fiscal stimulus. And going back to old Milton Friedman, inflation, in his opinion, everywhere is a monetary phenomenon. Too much money chasing too few goods, ergo inflation. And I think that's exactly what's happened. And so to bring down inflation, we've got to reduce the money supply. We've got to reduce the amount of money that's out there chasing goods and services. Fiddling with the exchange rate is not going to do that in the medium to long term. The Bank of Jamaica has to do what it seems to be doing, on one hand, which is increasing interest rates to slow the demand for money, withdrawing liquidity from the economy again, to control the money supply and bring down inflation.
Strong words, Charles. I like it. Now, my question to you then, Charles, quickly is, will a stronger Jamaican dollar, as Keith mentioned, almost every other currency in the world has depreciated against the US dollar, and those countries are exporting more as a result and consuming less as a result. So will a stronger Jamaican dollar help or hurt the inflation fight?
I have really no idea. In the long term, in the medium to long term, it'll make no difference, because the currency is not strengthening because we're exporting more. We have a bigger current account surplus. There's a greater demand for Jamaican goods. No, the currency is appreciating because of machinations within the Jamaican financial sector. So there's nothing fundamental, or there are no fundamental economic developments that are pushing that. So I don't think it'll make any difference in the medium to long term. Short term, it might, but over the medium term, it won't,
Okay, thank you.
in my opinion.
Great. Well, I think we've covered the economics of the inflation issue as well as the exchange rate issue and how the Bank of Jamaica is managing it. But one of the things we do want to address also, what steps can people take, especially people such as pensioners or retirees who live off a fixed income? What steps can they take to manage inflation? Keith, can we start with you? You're chairman of a pension fund.
Yes. Thank you for pointing that out, Ms. Doctor. Yes. Look, it's been a tough year for investment markets everywhere in the world, pretty much. If you've been, well, if you're in pounds, it's been a tougher year.
Yeah.
In sterling.
Yeah.
Not this sterling here, but
GBP.
UK sterling. It's been a tougher year. But and you can see an article that I wrote yesterday on that, actually, if you're interested in the Observer. But from an investment standpoint, it's not very surprising that you've seen, because liquidity has been tightened quite significantly globally, but also in Jamaica, because interest rates have risen pretty much everywhere in the world. I think Japan is one of the few exceptions. In terms of the policy rate, you've seen stock markets across the world have, including our own, although frankly our own has actually performed better than many of the others.
On a year-to-date
on a
basis.
year-to-date basis. But you see stock markets around the world that have, performed badly. Again, unsurprisingly, because you've had, liquidity drives markets in the short run, and also and they also are dependent on the discount rate that's used to discount the future earnings. So you knew that at 0.5% in Jamaica for Jamaican dollars, you knew that there was really only one direction that interest rates were going to go. And you also knew that pretty much in the US, when you saw all the excess demand going on, that it was likely, we for example, had tried to reduce our bonds as much as possible over the last couple of years, really, because we anticipated at some point this was going to be an issue. So what I would say is you're starting to see some level of normalization in terms of interest rates, and you're starting to see, yields are coming off the ground. They were basically on the floor. Pensioners, it wasn't a good thing to be in some of the interest rates you were getting as an investor were really a bit ridiculous. The question is, where does it end? And what is a good time to go into for example, the bond market, or what is a good time to go back in the stock market? I personally think that, the US stock market has a way to go still, mainly because whilst you've seen some rise in interest rates, you probably haven't seen the end of the rise in interest rates. When I say the way to go, I mean a way to go down. You haven't seen, you haven't really seen much adjustment yet in earnings and margins and profit margins. And US, a lot of people think the US, you probably see some kind of mild recession next year. It could be a not so mild recession, depending on if something breaks, as they say, like a financial institution gets itself into trouble. So that's there. Here, our markets were a little frothy, I think, at the end of 2019, and also some aspects are still frothy. Some people would say that some of the junior IPOs are not driven so much by economic rationality, but some of them are being driven but just by simple supply and demand and speculation. And that's not a phenomenon that is very different from what happens in the US. It's just that we haven't. Some of us remember, periods such as 1992 when the stock market went up 400% in 1 year, and I do remember telling a bunch of friends of mine that this was a bubble, and at the time no one wanted to know, and that's always the case at these sort of tops of these market cycles. No one wants to know because they're making a lot of money. So I would say that you're getting closer to a point where you can start to think investing both in local fixed income and in Jamaican stocks and even in overseas stuff, but you're not quite there yet.
Okay.
So you probably need to be a little cautious still, because you may have another leg or so down. I would hope there's not too much of a leg down in the Jamaican stock market. When I say the Jamaican stock market, I mean more the main market companies, which are somewhat cheaper on average than they were, and some of them have performed quite well from an earnings standpoint in terms of recovery from the COVID. There are definitely some junior stock market companies in particular which are that look overvalued to me. I won't mention names. And clearly, some of the US darling stocks which have been done so well are coming back to earth at the moment. So at some point, there will be some excellent buys over there, and maybe there are some already, but it depends on your time horizon. So I would say the traditional portfolio, 60-40 stocks and bonds, has done exceptionally badly this year. But it's not very surprising, because what used to happen, you've had a situation where the bond market had reached, it was the end of effectively a 40-year bull market in bonds. So there was nothing to go. The automatic stabilizer, which bonds are supposed to be, there wasn't really anything left for it to automatically stabilize. Where you are now is that you started to see some yields on bonds. Our own bonds, by the way, same article Wednesday, the Euro bonds are where it's amazingly enough, Jamaica has a lower yield as in risk premium on our Euro bonds than many investment grade countries, and we're quite still some distance from investment grade. So,
yes.
So basically, our finance minister, at least if you believe the global investors, is doing a good job. And so far, all that turmoil that you're seeing elsewhere, and in places like Bahamas, the bonds have blown out. They're, massively above Jamaican bonds in terms of yields. They're, Jamaica's been pretty damn solid in terms of, and this is good for Jamaica because it means that people see, at least financially anyway, see the risk level as reasonably low. I personally think that the risk level is low, and I'm looking, again, whilst we had, offloaded some Eurobonds and a few years ago because we thought the prices were a bit too rich, I would be looking back at some point. I think there'll probably be an opportunity to buy some of our Eurobonds. If you can get 8% in US dollars on a long-term basis, I think you're not doing too badly. So that's just a hint. Of course, everybody else is also looking for that 8%. So there'll be a rush when it gets there. But anyway, so I think you're not there yet. There's more pain probably to come, but you've probably got it on a 12-month horizon, and certainly maybe even a 6-month horizon. You definitely should be looking out to that future. And certain bonds, I'm sure Charles has found some nice bonds that don't move very much, like the Jamaican dollar, kind of hold their value despite what else is going on. So on that note,
thank you, Keith. That's a great segue. So not quite buying yet, but looking 6 to 12 months down the road. So Charles, again, reiterating, what steps can pensioners or retirees take, people who are living off fixed income, to manage in the current environment?
Right. Well, I think Keith made a good point that we expect the market to hit bottom in, say, 6 to 12 months. But as he also mentioned at the end, there are, at the moment, very good short-dated notes available in the global market, which can give you very good yields. And because of the short dated either call or maturity, there is relatively little price risk. There's little downside from here because it's so short to their maturity. So there are short-term opportunities that you can take advantage of right now. For the longer term, certainly it's worth waiting a bit because the market is likely to hit bottom and hopefully have a turnaround in sight within that 6 to 12 month time horizon.
Okay, that's good to know. So we'll keep a lookout for the opportunities.
Well, as I said, there are opportunities right now that are
Right.
available.
Okay, good to know, good to know. So I have one last question that actually also again relates to BOJ policy, but it is really a question for the Twitter trolls. The brain drain has been the subject of extensive debate, both on social media and in the print media. How are the BOJ's actions influencing the migration of professionals? And this doesn't have to be their current actions, it can also be historical. Dr. Braithwaite, do you have any thoughts on the matter?
Well,
The first time I heard of that view is when I got the email from Michelle. I don't see a connection.
I'll
I don't
comment.
see.
I'll
So there's
comment.
no
But I-
connection between
I
the
don't-
lack of economic growth and the lack of development and the migration?
No.
of
We're
professionals?
talking here about what the
BOJ
Bank of
policy
Jamaica
is
policy,
doing, yeah.
right?
Okay.
I think, I don't think we give the Bank of Jamaica enough credit, for what they have been doing over the last decade or so. And not only the BOJ, but when you think of macroeconomic policy generally in Jamaica, we've come a far way, you see? So people deciding that they want to leave has to do with opportunities, I look at the University of the West Indies and their lecturers leaving. Only crazy ones like me remain. Right?
Yeah.
And especially in a field like economics, the significant salary cut you take to come to Jamaica is ridiculous. So it's not about what the BOJ is doing or you don't agree with them increasing interest rates or what have you. No.
So
I don't buy that.
Economic policy then, which branch of economic policy would affect economic growth and development so that we would become a wealthier country, so that there would be more opportunity for people to stay here?
Okay, so in terms of policy, like I said before, I think the government, and when I say government, green or orange, has been doing the right thing, if you look over the last decade or so, yes? But Jamaica is in a space where it's very hard for you to keep talent. I mean, can we significantly increase salaries overnight? No. So if you talk about, take for example, teachers leaving, you can't necessarily increase those salaries significantly. The government doesn't have the fiscal space to do that. I will admit, however, there are other things that the government can do, maybe in terms of allowing teachers the ability to own a home, right? If you set up a scheme where they can, own homes or what have you. Maybe assist them with transportation. Why don't we have like special buses for them and maybe their children? So there are other things that can be done, but you're not going to be able to compete with Britain and the United States in terms of remuneration. It's just not going to happen, right? And so, very often, put it this way, we are in a war. I'm not talking about the type of war happening in the Ukraine, right? There's a war on inequality, right? War on poverty, right? War on inflation. That's the war we're in. And when you're in war, it takes everyone in the economy, every citizen to assist. So people will have to make some sacrifice. It's as simple as that. But to say, okay, the government is going to change policy to stop people from leaving, it's not going to happen anytime soon. The government is doing, I think, and successive governments have been doing right by the Jamaican people, generally speaking.
What about right by delivering economic growth? Sorry, Keith, you wanted to say something.
I just want to make I think
Yes.
there is an area where I did want to respond to that question. I mean, I still remember this. My best friend at the time, I said to him, why are you leaving Jamaica? And he says, well, I can't get a car and a house. And then he went to California and had apparently got a big house and lots of cars and, the IT sector. And I think that goes to the point about, maybe I'll just make the point that whilst I agree with what Simon was saying about BOJ policy, the consistency has been much, far improved over the last decade or so. Nevertheless, I do think one of the things that you've had a revolution. The low interest rates have created a revolution both in car buying and in mortgages in Jamaica. That revolution has occurred. And I think the BOJ wants to be careful now. They're at the point now where I think they need to be careful and think carefully about going much further in terms of interest rate policy, because they could affect those two markets quite considerably. They're at the point where they're going to start to run the risk of affecting both the car financing market and the mortgage market. So that's a cautionary point. I'm sure they're aware of that. And of course, the other revolution you've had is that you've had a revolution of corporate financing, both on the equity side and on the loan side. And again, that would not have happened if we were operating with interest rates of 25 or 50%, or these things that we remember, some of us. And that's one reason why it's very important that we maintain the macro stability to avoid ever going back to that type of scenario, which some of us remember quite well, and of course, amongst other things, led to the financial crisis at that time. Right. But so that revolution in financing, both on the private equity market side, and the minister made a reference to that at a recent speech last week, and also on the lending side, because what has happened is that the capital market has become a competitor to the banks, or was, in fact, less so since COVID. That kind of put a little bit of a damper on that. And so the hope would be that we return to what I would call the situation where we were about to become the capital market center of the Caribbean. And then COVID hit, and of course we're tourism dependent. Yes. So the hope is that now things seem to be improving again, that we can get back to that positioning, the potential positioning, I should say, and truly be that capital market of the Caribbean. And that's why I'm saying gently to the Bank of Jamaica that you're now reaching the point where you should think very carefully, particularly after today's increase, about any further increases, because you don't want to, those four major externalities, you don't want to. Yes, I know you want to target the inflation rate, and I know you want to bring it down, and I know you're trying your best, and I know your tools are limited, but I do think they need to start thinking very seriously about that. And of course, if they go a lot further from here, you might see financial stability issues. Apparently, some of us noticed the Bank of England, for example, having to go and basically drive down the price of 30-year bonds in the UK to stop the pension. Supposedly the pension funds were going insolvent. I don't know what they were doing. They must have been doing some funky stuff for that to happen. But leverage apparently. But yes, we don't leverage our pension funds here. So and we don't go into leverage vehicles. But nevertheless, the point is that dramatic movements in interest rates. And we've seen a fairly dramatic move over the last. Since October of last year. I mean, it's pretty dramatic, 6%, from half to 6.5 today. Yes. 6%, that's a lot. So I think that's a pretty dramatic move, and I think we need to now really think seriously about where we're going from here. So that's a message to Governor Biles and
I hope he's listening. Thank you.
And unfortunately, Dr. Robinson wasn't
Other panelists, we tried. He
We
was
tried,
busy.
but
Yeah.
No, Samuel's great. No, I'm just saying that we thought we'd have the Bank of Jamaica on the day when they were going to raise interest rates, so that would have been a good one, right? You could put him on the spot, right? Right? So he's not there, so you have to stand in for Wayne, you see.
Well, not necessarily, because just to be clear, I understand why they had to start increasing interest rates, but just like you, to bring it all the way up to 6.5, no. Maybe
short.
somewhere around,
The time was short as well. It's a short period.
True, exactly.
to do that.
But what I do agree with them on is, again, trying to stabilize the exchange rate.
Okay.
And to reinforce the point, if you remember a few weeks ago when Jamaica broilers lowered the price for their products, yes? There were 3 reasons given for that price reduction that, allowed them to make the price reduction. 2 had to do with external factors. Supply chain issues being, resolved and the lowering of commodity prices. The 3rd factor was exchange rate, right? Who's controlling the exchange rate, or who is able to? Bank of Jamaica.
Well, I'd like to ask the people that get remittances and the people that own hotels if the appreciation
And
of
let
the
me
exchange rate
stop
has
you
helped
there.
their business.
Let me
because
stop you
it's
there.
a net negative for any exporter or any
Exactly.
wealth
No.
creator in this country.
Yeah.
But I'll let Charles have the final word on that.
But
He hasn't
can I,
had
before
much to
Charles,
say.
name
Sure,
one thing?
go ahead.
Yes,
Before
sure,
Charles?
sure.
Okay. If I'm an American and I'm looking to come to Jamaica to spend some time at an all-inclusive, I don't care about the exchange rate. When I go online, what I see are the prices in US dollar. The price for the plane ticket is US. The price for the hotel stay, US dollars. Whatever you spend when you get to Jamaica is negligible, right? So this thing about...
Disagree completely.
All
Your
right.
Jamaican vacation got 2% more expensive, but a vacation in Chile got 20% cheaper. So that's why Jamaicans right now are flying to Europe and they're going all over the place because it's much cheaper. Sorry, Charles.
Yeah, no, well, the real question is, again, comes back to economic growth. And many of the countries that have grown rapidly over the last, I would say, 4 or 5 decades, have done so through export-led economic activity. And there are basic elemental reasons for that. But the real question, or the answer to the question Marian asked, is the price or the cost to the tourist is one thing. More important is the financial viability and profitability of the hotel operations here in Jamaica. It's more important for the exporters. Their export price is fixed. Their Jamaican costs are what are variable. And if their Jamaican costs are going up and their revenue in US dollars is stagnant, it means their profitability is falling. What that means is that you're going to have slower growth or no growth in your exports, and that's going to translate directly into overall economic growth. Yes, we've made progress in Jamaica in terms of macroeconomic stability, but macroeconomic stability is not an end in itself. It really is a platform from which you grow, and it's the growth of the economy that's going to increase the wealth of the average Jamaican, and it's going to make the average Jamaican better off. Unfortunately, we haven't been able to deal successfully with economic growth. We haven't been able to grow the Jamaican economy significantly over a very long time. And even in this last maybe 5 to 7, maybe even 10 years, when we've had improvements in our macroeconomic policy, we still haven't seen that reflected in significant growth. And one of the things I think we need to ask ourselves is, why is this so?
Charles, that's an excellent question, but not one that is scheduled
We're not
to
going
be
to address
answered on
that
the
today.
panel, and I must...
That's going to take a while.
Yes.
It'll take a very long time, a lot of
I
research.
must say that we're over time actually, and Dr. Braithwaite, I promise I'll let you respond another time, but I must allow the invite the guests from the audience to be able to ask a few questions. We're on a bit of a timeline because we're on the radio. If anyone would like to ask a question, they can come up to either of these two mics, or if you raise your hand, someone will take it to you. But are there any questions from the audience? Mr. Rochester, thank you for asking. Yes, troublemaker.
You also know that all the problems of the world many times.
Yes.
That will not happen tonight, right?
Yes.
But I love economics because everybody's right? Because there's always a reason why we're not wrong. But I travel in the Caribbean. I mean, I spend a lot of time in Trinidad because I'm on a board there. So, and they look at us and say, you know, we're doing a much better job of managing our economy than either Trinidad or Barbados. What is different with Trinidad and Barbados? They have fixed exchange rates. We are supposed to have an open economy with a variable exchange rate. Because the one word Charles hasn't been brave enough to use is financial engineering. He said it in many other ways, but never used that specific term, right? And I am asking this panel whether they believe that we could survive, or we could, I mean, we all agree that things could be done better, but can a fixed exchange rate work in Jamaica? Would that be better?
Okay.
I mean, given what has happened in Barbados and Trinidad, are we really the leaders, or there's a better way to do whatever? Okay. I'm not going to say anything else.
Thank you.
Yeah,
Thank you, Mr. Rochester. This gentleman is the chairman of our audit committee. He asks us hard questions all the time, so he's no different right now.
Well, I'm happy to have a crack at that one. Many years ago, the chamber actually asked me to write a paper on dollarization, which was funny because the BOJ had written something just around the same time, so we were able to use what the BOJ had written as the starting point for that type of discussion. Now, of course, what you have in Trinidad is supposedly a floating exchange rate, but in reality, supposedly, but in reality is very closely managed and sort of semi-fixed. Barbados has had a fixed exchange rate for decades. I'm not sure if it's not from the early 70s. And funny enough, I was on a panel debating exactly that a number of years ago in Barbados. When their choice at the time, actually, what they were talking about was, do we restructure our debt or do we maintain our fixed exchange rate? That was actually what the conversation was about. And I think that's part of the answer for you. In other words, I mean, Jamaica did a partial restructuring of its debt in 2010 and 2013. What the BOJ will tell you, the domestic debt, what the BOJ will tell you is that since that period over the last 9 years, we've achieved some level of improved competitiveness. So they will say, that's why we can allow the exchange rate to revalue marginally for a period of time. They won't say this explicitly, but that's what they actually mean. So, and that's why it's okay. And the number is somewhere between 12 and 14% in terms of improved competitiveness over that period, supposedly. And that means that we can allow to lose a bit of competitiveness by virtue of, keeping our exchange rate stable with a high inflation rate, which is above the US rate, although not that far above, frankly. So it's quite similar. So to answer your question, you need to have, if you want to have a fixed exchange rate, you need to be prepared to do what is required to achieve a fixed exchange rate. That means that you need to have a, tight fiscal policy. We actually have a tight fiscal policy currently. You need to make sure that you don't lose competitiveness by virtue of excessive wage increases. For decades, the Germans actually were quite good at this. They made sure that productivity improvements they made sure that any loss of competitiveness was compensated by productivity improvements on the exchange rate side. So the exchange rate revalued, but they maintained competitiveness. And of course, it's easier to make Charles's point, Samuel's point, it's easier to do that in when you have a large manufacturing export industry versus a country such as Jamaica, which does not. Of course, although that could get into our growth, why we haven't grown. So I don't want to get into that too much, because that'd take too long. But so overall, I think the answer is you have to be prepared to take some pretty tough decisions if you want to do that. If you want to say the exchange rate is your priority. Well, tough means politically unpopular. And, I would question whether, certainly in Jamaica's case with high inflation and loss of competitiveness, whether it's been a good thing. Jamaica, for a long period of time, allowed its exchange rate to be overvalued by various economists, including a Professor Donald Harris, Kamala's father, had written extensively about how we missed the boat by virtue of allowing that to happen at various times over the past several decades. So, on that note, so it's bad to have an overvalued exchange rate because it means you'll never have a good export industry and it'll never drive your economic growth, as Charles has noted. And on that note, I'm going to allow. There's a gentleman who worked at the Bank of England. He doesn't like people to reveal that, but that I'm hoping he's going to answer a question on sterling. But even if he doesn't, let's welcome.
It's on? Okay. Keith, thanks. My name's Dennis Jones, and yes, I did used to work at the Bank of England. I also used to work at the IMF, and I'm not afraid to admit that I worked at both of them, and I've dealt with financial crises all my life.
Which is why you play golf all the time, right, Dennis?
And I'll talk about sterling. We're here for a sterling event. No, as an economist, we're supposed to not wallow in the past and think about the present, but really we're supposed to focus our eyes on the future. So when I was listening to the panel, the thought that was going through my head was, okay, fine. We know really the subject that we're talking about is inflation. I apologize to people in the audience if they didn't understand all the technicalities. Maybe Charles will arrange a seminar or a weekend retreat or something. We can talk about some economic terms. But let me make a heroic statement. Inflation will come down in Jamaica. And the reason I say that is because the central bank is committed to bringing inflation back down to somewhere between still hearing? Somewhere between 4% and 6%. That's their commitment. We're now outside that because we're at 9, 10%. So inflation has to come down. The problem that I see, and I think the problem that the panel can think about for a little bit, and you'll all think about, is if inflation's coming down because interest rates have gone up and the cost of living has gone up through interest rates, what's that going to do to the economy's ability to grow? And the problem I see that the central bank has, not just in Jamaica, but in every country, is the very difficult balancing act between controlling inflation, bringing down demand, stopping people buying stuff, basically, and getting to a point where that curb in demand doesn't stop the economy producing. That's the extreme. So the balancing act is to get prices to come down because we don't spend as much, but we don't want people to spend so much less that people go out of business. That's the balancing act. And the central bank doesn't really control that part. It hopes that fiscal policy, business activity shifting around of exchange and so on and so forth will keep things in an even keel. The problem I always find with Jamaica when I think about that equation is that we're structured in a way that's not conventional as far as economic theory goes. We have a huge sector called the informal sector, which actually doesn't respond to things like conventional economic policy, tax measures, interest rate measures. If you've got an informal sector that doesn't use banks, uses all kinds of means to get around rules and regulation, policy levers don't really work. So if that's the case, what are we really doing? I don't have an answer to that question. But the sort of thing that makes me worry is, for those of you who've not followed what's happened in the UK in the last few days, budget was introduced, huge tax cuts, huge amounts of money going to the wealthy rather than the country as a whole, and markets didn't like it. Sterling fell through the floor. Rates are going up, and the central bank had to go and buy up a lot of bonds to save the pension industries because they were being called to get margins. But what the UK's suddenly seen that the government hasn't done directly is that a lot of people in the UK already suffering from high inflation, looking forward to very high energy costs coming into the winter and already thinking, when I empty my pocket, I haven't got enough to go to the grocery. I haven't got enough to pay for my energy bill. I haven't got enough to put food on my table. And now my housing costs have gone through the roof because, as a lady said on the BBC this evening, she had a mortgage offer last week from a lending institution for 4.5% interest rates. This morning she got a message to say that that offer is off the table. The offer that's now on the table is 10.5%, right? So she cannot go forward and buy a house. That's the shock that the UK has had because of the government's actions. What Jamaicans may or may not be suffering is similar sorts of shocks. Do people actually have the wherewithal, the means, let's say, to be able to see prices come down from where they are now, but still manage to survive and live their life, but at the same time also keep the rest of the economy going? I mean, the trouble with economics, as Mr. Ross was saying, is that you can always be right, but there are lots of moving parts, right? And so I'm not going to try and put too many moving parts up there, but the biggest problem I see for Jamaica coming out of the inflation is, yes, we have it triggered because of supply shocks. We can't do anything about that. Wheat from Ukraine, we can't grow it and compensate. We have our own agriculture. But to what extent, when prices are coming down again, can we actually get onto a trajectory called faster growth? Because we actually weren't there before. So where we are going to start is, sorry, economists are also a bit pessimistic, but where we are before is actually going to be worse. So when we get prices to fall less, how far down will we have gotten in the economy for us to actually think about the prospects of our future in terms of our productive capability?
Dennis, and the question?
I was going to say.
That was the question. How far?
I thought it was a dissertation.
It's the problem when you have so many smart clients.
You're on the panel, I'll let you talk. No. The question, that is the question. I mean, there isn't necessarily an answer. The answer is going to come from panelists or maybe people who are here in business to say what they think they will be in a position to do 3 months, 6 months, 9 months, 12 months down the road to get Jamaica's economy back onto that track. Because at the end of the day, that's what we want. Inflation has made us poorer, will make us poorer, right? But to survive, we need to produce more. So it's balancing those two things. We don't want to be so poor that we can't survive, and we want people to be able to produce. Sorry.
Thank you. So if I could just sum that up quickly then, Dennis, are we asking how do we get back on track after the central bank has succeeded? And maybe Dr. Braithwaite, followed by Carol, if you guys have any comments or thoughts on that. How do we get back on track to growth?
I question his view about the central bank succeeding, because look at it this way. Not because A comes before B necessarily means that A caused B. What do I mean by that? As I said before, I'm not a fan of the central bank increasing rates to 6.5, and they might very well increase it even further, right? I'm not a fan of that, because when interest rate rises, yes, there are firms which go to the bank. They borrow money for their cash flow or what have you, sometimes to make payments, wage payments or what have you. If they're faced with these higher interest rates, right, what are they going to do? They're going to want to pass on those prices to the consumer. So, and this is economic theory, you know, yes? This has been studied even here in the Caribbean, that if you're not careful, the thing that you're trying to prevent by increasing interest rates can fuel it even further, can fuel inflation. So that's my concern. How do you get to what is called the Goldilocks rate? According to the IMF, the neutral rate is like 4%. That's where the policy rate should be. And I'm not saying that the IMF is against what the BOJ is doing. I'm just saying what their neutral rate is. What is the BOJ's neutral rate? It ranges from about 2.5 or 2.6% all the way to 7.6%. So that's why I'm saying I would not be surprised if before the year is out, we get to 7% or 7.5% in terms of the policy rate.
Okay.
No.
All right.
We need to stop.
I appreciate that. I guess that would possibly reduce the chances of staying in restrictive growth for too long. But I guess, Charles, what your...
I'm really confused. I don't know how else the BOJ can reduce inflation than by curbing the growth of money. Now, when inflation does come down, I don't know, Samuel, do you have any thoughts on that? I mean,
yeah.
What are the tools,
yes,
other than
let me say
which
it, right?
reduce inflation?
If you listen to Governor Biles, he'll make it clear what they're using is a blunt tool. One of the first things you learn in econ when it comes to monetary policy is this: you can lead a horse to water, but you can't make it drink, right? Some months ago, I think it was May, the Standing Finance Committee, several governors, I think 3 of them, Biles and 2 others, were there and talking to the members of parliament and what have you. And do you know what the Bank of Jamaica said? In their survey of firms, about 70% of firms didn't understand this inflation targeting thing. Another 60% don't know what the point-to-point inflation rate is. So here it is. You're creating policy, yes, for people who don't understand what you're doing. What the Bank of Jamaica is trying to do is not to force the hands of firms, yes? What they're trying to do is through the tools that they have to influence behavior. But if the people who you're trying to influence don't understand what you're doing, but what they do understand is when they go to the banks and they are faced with higher interest rates, they're not going to suck up all of that cost. They either close the business down or they pass the cost on to the consumer. I'll give you one more anecdote. I spoke to a friend sometime on the weekend. He's in the food business. And I said, how are things going? And he says, you know, I'm trying not to pass on costs to consumers and so on. Then I asked him, I said, what about increased interest rates? You know what he said to me? Well, you know, Sam, I opened this second shop and I did it without going to the bank. He is one of those lucky ones who has family and friends who could front load him. You look at the Chinese businesses, and this is not me making this up. Some of these people don't go to the bank. So what are you going to think when you're increasing interest rates? Because, you know, this is what happens in the UK and America. And let me say this. You would have heard from time to time people say, oh, the Bank of Jamaica is being textbookish. It's not that they're being textbookish, you know. The textbooks are largely written for an economy that is not Jamaica. It's written for UK and the US. It's a different reality, and that's the problem.
No, I disagree with that 100%.
Well,
Charles,
that's my view.
Charles, tell us. Charles, the final word.
No, look, the laws of economics apply everywhere. And one of the reasons why Jamaica has had such a dismal economic performance for the last 50 years is because we believe that they don't apply here.
Well,
No, Samuel, what you're saying is true at the firm level. But at the aggregate level, what happens is, if the firm can't pass on its business, it goes out of business. That's less demand. That's less employment. That's where the recession side of things comes in. But that lessened demand is what will lower inflation and bring the economy into some sort of equilibrium.
I have to jump in again. Because I find it, let me tell you, there's some things about what the Bank of Jamaica does that I don't buy. There's this view that, okay, you're slowing the economy down by increasing the interest rate, right? In the United States, they can talk about slowing the economy down and going into a recession because guess what? They have enough money to give stimulus to people, right? They have enough monies to borrow. The United States is the most indebted country in the world, but guess what? The debt is in US dollars. They are the ones who print US dollars. Jamaica doesn't have that luxury. So we're talking about slowing the economy down as if, oh, it's this thing that it's acceptable because econ theory says it. Most of the people who write the articles and the books on econ theory are not Jamaicans.
Doesn't matter.
And if you read my
So
articles
why
in the
does it
Observer,
work everywhere? Why does it work
hold on,
everywhere?
hold
Why
on,
does
hold on.
economic theory work everywhere? I mean, economic theory is
It
also
works
born
here
out.
too.
It works there too.
No, I
because we haven't-
think you guys
It
are
works
missing the
on
point.
detriment.
If you read the things I write in the Observer, what I try to do is not just simply to quote what you're hearing, what is being parroted, you know, in a flippant fashion. I look at what Caribbean researchers are saying, what Jamaican researchers are saying. And so when I talk about increased interest rates actually fueling inflation, right? This is based on a study done by Caribbean
There is
economists.
a St. Lucian economist that is a Nobel Prize winner, a St. Lucian economist, and no Caribbean island is following his advice. But on that note,
But it's worked very well
but
in
it works
Southeast
very
Asia.
well in the developed world, but no one in the
In
Caribbean
Southeast
follows it.
Asia.
Anyway, can I?
I am very familiar with him, and I've done lots of research on Arthur Lewis.
Yes,
That's-
Sir Arthur
that's-
Lewis.
Yes.
Yeah,
We should
anyway.
pay a little more attention to his work.
Anyway, well, I have to agree with that last point, Charles. We definitely need to pay more attention to Sir Arthur Lewis's work. But maybe I can just make a quick middle ground comment.
Yes, please, that would be a great note to end on.
I mean, I do think that whilst economics is universal, it is also true that the Caribbean is small. And
Doesn't
in
matter.
small countries, you have some level of oligopolistic type
Doesn't
behavior.
matter.
Well, it does matter when you have only a couple of
Singapore
players.
was small.
Yeah, I know. No, that's an export argument for the Sir Arthur Lewis side of things. But I agree with that point. But I'm
Work
just
for them,
saying.
why can't it work
I'm
for
just
us?
saying that what we do see in the Caribbean is, and you saw it in the FX market here, even, which is sort of quite oligopolistic behavior on a couple of players who basically made it go up and down, and then the Bank of Jamaica decided, well, I've had enough of this, and so that was part of the
They were
the
willing
reason
participants.
why you've had a more stable now. They also were targeting it, specifically, so that's another side to it. But anyway, so we know that there's small countries, small societies, you can have more market influence than in ones which are much larger and might have global economies. But I also agree with Charles that you need to make sure that you are very careful if you're planning to do interventions, that you don't go against the grain of global market forces. But specifically, I wanted to tackle my friend Dennis's. He made a good point, I thought, about the 40% of the economy that's informal, and how interest rates aren't likely to have much impact on that piece of the economy. And also, I just want to draw your attention again to the point about mortgages, which is that one of the things the Bank of Jamaica has complained about, which is interesting, and another example of this market power, is that they've raised interest rates tremendously, and you've had a relatively small impact so far on the mortgage rate. Now, why was that? Well, if you think about it, the reason was because you had oligopolistic market power going on with the main banks, and they were able to absorb that sharp increase. But the thing is that you're now at the point where people are starting to move the rates. They're not absorbing them anymore. They're moving them now, and that's the point I was trying to make, which goes back to Dennis's point. So we haven't seen the 4.5 to the 10.5 shock that apparently has occurred in the Bank of England, but we don't want to see that because we don't want to get anywhere close to that.
Yes.
Because then we'll have real problems quite quickly. So.
Yes. Thank you. That
So
was
that's my sum up and middle ground approach. Nice to have
Exactly.
the opportunity to be in middle ground. I should have been in the middle there. I should have been in Charles' spot there.
Keith, that's a perfect note to end on. I appreciate the middle ground. Thank you guys so much for a spirited debate. We appreciate the context, and thank you guys, the audience, for your questions. We are going to end our formalities right